What's up, guys? It's July 15th, 2025. We had a bit of a trading range day with some bearish price action. Pretty cool. I want to give a quick shout out to the members and subscribers. I appreciate you guys tuning in. I appreciate everyone joining the membership. I will be dropping more videos later this week. I'll also be live streaming later today, so check that out if you want to see how I trade around trap traders. And anyways, yeah, let's get into the breakdown. I do have a trade I want to get filled short here after this bar closes in a couple minutes. Get it short. Bulls are now trapped. The bulls up out here are underwater. So that'll be a nice 50% pullback leg 2 trade. Problem with this trade is I do think there's enough momentum for this to start another breakout, but if it starts to reverse, there's a leg 1, pullback leg 2, pullback leg 3, pullback leg 4, which is more trading range. There's a trading range right here. Then we break out leg 1, pullback leg 2. Market's starting to break out below this range, so I could get a second leg, but it could be a late leg. We could be in leg 3, and the leg 3, when we're in an overall leg 3, the probabilities for seeing a leg 2 go down. The reason I still trade them is because if this trap pulls up here, and so the trap pulls up here, I want them to sell out here, but if we're in trading range, bulls will be buying lows, and they'll keep buying to whatever they decide the trading range high is. Could be up here, could be up here, could be wherever they decide. So that's the difference between the leg 1, leg 2, in the beginning of the market cycle, and leg 1, leg 2 at the end of a market cycle, is that the context is different. So weekly chart, bulls are getting bad follow through at new highs. Today we had some selling, but there was a lot bulls were making money, so it's not the strongest bear trend. It was more of a trading range till the end of the day. They got the breakout. Bears got the breakout. I'm gonna set this order. Been trading small. It's been working out a lot better. I'm able to follow the system a lot easier. Trading small, so I'm gonna keep it trading small and just see how it goes. Trade is set. Again, if you guys want to see this kind of thing live, come back later today. I'll be streaming in a couple hours, probably like 7 o'clock p.m. Pacific Standard, maybe a little bit before that. That's generally the time I'm going to try and stream. Anyways, bulls are getting bad follow through at highs. Three bars in a row. This is the weekly chart. This is the daily chart. 1, 2, 3. Shot off to get second leg. But if we're in a trading range, bears are going to short this, and they're going to feel confident holding past the 50% mark because there's trap bears down here, so they short more up here. Their break-even price is here. But if we're in a trading range, bears will feel confident holding past that, and then that will create they'll be making money below the 50% mark. That's one way I've been using the fit. How do I say this? That's one way I've been using my system to tell me what the market conditions are. If bears are buying back shorts here, then I know we're still good to go. If bears are making money below the 50% mark, I have to think we're in trading range, and then I renegotiate my position. So we'll see what happens if bears can even get down to the 50% mark. Maybe we go to the EMA and rally. Maybe we break through the EMA. We'll see what happens. This is nice 3 bull bars with a gap, so we know bears are trapped. Daily chart. Leg 1, pullback leg 2, pullback leg 3, sideways price action. Now we're in the trading range that we were just looking at earlier, like right around here. This first bear bar was a better fade, so you could buy this bear bar and make 1R. Now we're in a bear channel. The bear channel started up here. Right, there's the highs of the bear channel, trend line break, and now we're starting that second leg. The minimum objective for a second leg is to get back right here, and that was met, I guess, today in the overnight session. So we'll see what happens if we keep selling, or are we at trading range lows and we start to rally. Interesting time. And then again, I don't think it's good to predict the markets. I think it's good to have we see the price action, we see the price action, then we think about the probabilities, and then we place a trade on those probabilities. The leg count, market cycle, and open gaps and closed gaps help us determine the probabilities of the trade. That's why those are the only 3 things I think of. If you guys have been following me since day 1, I've somewhat been changing my system every couple months. However, I haven't actually been trading the type of trade I've been taking. I've been changing the type of entries I've been taking. Every time I've had a system, it's been based around a leg 2. It first started with 3 bars and a pullback in our market order. Then it started to be, after that, it somewhat transitioned into I1Rs, where I would short the high of the channel. Now, something that's really resonating with me is, rather than the high of the channel, shorting the 50% pullback, because it makes sense from a mathematical perspective. It makes sense from trap traders to get out 50%. Context-wise, it's just starting to jive with me. So that's why I'm talking about that in these breakdowns a lot more. I hope that resonates with you guys. Big gap up, bar one, bad follow through for the bulls, good for the bears. This could be a climactic breakout. Bar two is follow through for the bears, bad for the bulls. Did I say that right? Gap up, bad follow through for the bulls, good for the bears. Bar two is good for the bears, and then we have 3 bars in a row, shot to get second leg. The pullback is fractal, so we can't see it on this chart. But this is the first pullback. Leg one. Well, you know, if we're going to count fractal, this is the first pullback. Leg one, pullback, leg two, pullback, leg three, and we start to go sideways. But when I was reading this, well, it's weird. Okay, so this broke this trend line, so I count it as a leg. But when I was reading it, I was trading NASDAQ. When I was reading this on NASDAQ, I think I missed my target. I can't even remember. Oh yeah, so I missed it by 1 tick, and then I got it on the next leg. Yeah, I was trying to short this right here. I missed it by 1 tick, and then I went for the next trade, which was right around here. It almost stopped me out, but I scalped out around bar 6 because there's a hidden leg right here. So bulls, this bar rallied, so bulls bought here, and then it sold off, and then it kept selling off. So once I saw this, I was like, okay, there's a hidden bear leg here. That's what I'm trying to catch a leg 2 of. I got filled. This pullback was a little too deep for my liking, so I scalped out around bar 6. Leg 1, pullback. Leg 2, fractal. Okay, let's go back to the ES. So bulls are buying up here. Bulls bought there's a tail on bar 1. So we know bulls are buying. They buy more bulls buy below 3. The rally doesn't get to 50%, so they're still trapped. There's also a tail on 2. So if you thought that we weren't going to get back to the 50% mark here, you could put it here because there's trap bulls. So the bear leg is from here to here. And look where the pullback is. So the bulls that bought here are underwater. The bulls that bought here are able to get out at break even. Bulls buy here, they buy more, they get out at break even. They're selling the market at the same time. Bears are selling leg 1, leg 2. Now I like the setup because it chains itself. So now we know that since there's a pullback here, bulls were also buying, hoping for the reversal. We do it again. We know this is not a trade I would take because I wait for at least 2 bars in a row. But just to show you that context trumps entries and whatnot. Bulls that buy the high of 4 are now underwater. Maybe they buy 5 as it closes. Maybe they start to buy 6. Let's say they buy 5 because that's how I trade. They get out at break even, 50% mark. So taking a measurement of bar 4, get out, and then you get the second leg with bar 6. So leg 1, pull back, leg 2. Bar 6 actually gets follow through, so now we have a stronger leg. I think I took this on NASDAQ, but I might have scalped out. Problem with this, it's 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. So if you're going to short here, you're risking the chance of a rally, which is why I got out pretty quick. I think it was for either plus or minus 1 or 2 points. I'm trying to get out on opposite setups pretty quickly, and I think that's helping my P&L. I'll see how it goes. I still have to finish the back test for that. I'm slacking on that back test. That's definitely, I'm not going to do it today, but maybe tomorrow, Wednesday. Yeah, probably I could finish it up by Wednesday, Thursday. I have some psychology homework with Randy Howell I have to do today. Okay. 6, 7, 8. So 7, 8, 9. It's a bull bar. It's a bull leg after a gap up. The problem is there's a lot of selling here, but we do have a gap up, so some traders would try and buy this. However, the traders that buy bar 8 have a moment to make a scalp. Traders who buy bar 9 have a couple moments to get out break even. If not, look, bears are making money. Remember how I was talking about on the weekly chart? If bears are making money below the 50% mark, we have to rethink our position. So the bulls that bought up here are seeing that bears are making money. That's not good, right? Because if they're looking for leg 1, pull back leg 2, bears should not be making money under the 50% mark, but they are. 3 bars in a row, or more than 3 bars, 10, 11, 12, 13, 14, 15. I did participate in this leg too on NASDAQ. And so this was my original entry. I was looking for something like this. Once I saw the buy on 15, I was trying to get, or maybe I had it like this actually. I was looking for a second leg down on this, and I didn't get filled. So I was looking like this, didn't get filled on 14, 15. But using the same logic we used here, there's a hidden bull leg here. There's a tail on 14. So I changed the fibs to look like this because there's trap bulls up there. And now bulls are buying the low of 15. I got filled on 16, exited on 17. This is my ideal trade. I like to be in the trade for less than 7 bars. Overnight session's a little different because it moves slower, but if I'm trading RTH, I'm trying to be in the trade for under 7 bars. I like to see my target get hit within a couple bars. If the market starts to meander too long, I'm looking to get out of break even for a small loss. Same situation here. This ended up being a loss. I didn't exit as fast as I would have liked to. Bulls buy the high of 16. They are trapped with 17. Good follow through 18. I got filled on 20. And then I thought I had some time to think about it because we were breaking out below the higher time frame EMA. However, this was strong enough to get a second leg up. And you can see that I had about 10-15 minutes to get. Did I get stopped? I think on NASDAQ I got stopped out. It was a little bit tighter. I think this popped up and then went like that. Something like that. Anyways, strong enough to get a second leg. Bears that short the 18 low are now trapped. They're going to short higher around 19 and 20. And look what happened. The bears that, so the same context works for mean reversion. Excuse me, the same setup works for mean reversion. Bears get trapped here. They short more here. Pull back 21. Exit on 23. That's a great trade. 3 bars. We're sitting in it. This is where things get sketchy because the best we are in, best bulls can do is get a trading range. But since bears were trapped on 21, bears got short on 21 thinking we're going to break below the higher time frame EMA. And there was a moment of profits on 22. Bears that short here, short higher, look at 23, even better. Sells off and rally, so there's a tail there. And you can catch another leg 2. Leg 1, pull back leg 2. Leg 1, pull back leg 2. The overall grand scheme of things, leg 1, pull back leg 2, pull back leg 3. Wedge top in what we now know to be a bearish trading range day. At this time, I think I was long around here looking for a double top, but may have got stopped out, may have hit out for a bigger loss, but biggest loss I take is 1R. Bulls that buy the high of 28. Buy more at 30, and look at 31 right at the 50% mark. Sells off and profits right away. Don't think I took that trade because it was set up differently on NASDAQ. Do the same situation. This is a 1 bar trade, so I wouldn't be in it, but I was watching it and it did work. Bulls that buy the high of 31 are now trapped because of 32. Sells off right away. They start to cover themselves with 33. You can see where the rally slows down is at the 50% mark because trap bulls are getting out, selling out. Bears who shorted 31 are adding to their position. Second leg traders join the party, and we're in profits pretty. I think the only time we see red is on 37. Other than that, we hit out on 38. Leg 1, leg 2. It's a great trade. The context is amazing. And please do your homework on it. I think this is a very strong setup. And there's a common theme here that when we're in a leg 3, that's when the trade fails. Look, leg 3, bulls get trapped. 41, 42. They buy more higher. There's the break even. Oh wait, this trade actually worked. Huh. I was at work around this time. So bulls buy here, bulls buy more here. They sell out here, and look, 46 actually goes to the target. My target's always the previous swing. And then bears buy back shorts, and that causes a rally here. Sean to get second leg. I saw this rally. I wanted to get filled, but I think I did some averaging in today at work, which I'm not too happy about, but I did make it out alive. So I'm working on not averaging it at all, but sometimes I do it. So we'll see what happens. That's my dog barking. Give me a second. Okay. Yeah, sometimes I average in, but I really just don't want to do that. So strong bull leg, strong to get a second leg, and it does 51, 52, shallow pullback. You heard that ping. I actually just got filled here. So what I'm looking for is a tail on this bar, not a strong close. If it starts to close strongly, I have to follow the rules and try and get out at break even or for a small loss, because if this bar closes strong above here, that means bulls are now making money and they can get a second leg, and I'm on the wrong side of the trade. That's what I'm working on this go around. If you guys were following me last week, you know I got annihilated on that trading range day. Blew up all my account on this day right here on Friday. So I'm trading live again. I had one sim account yesterday. I was trading sim, and then I was like, you know what, screw this, and I bought a sim straight to funded with Tradeify because I'm not dealing with sim. I'm gonna keep trading the way I trade. It wasn't. We actually did the math on this day. I would have been profitable. I broke the system, so it wasn't a system thing. It was a me thing, which I like. That's good because that tells me that I got a good system. Anyways, good rally, strong to get leg 2, and it does leg 1, pull back leg 2, pull back leg 3, coming right around this swing, and it sells off. I'm gonna speed this up because I just want to show you guys where I made my mistake averaging in today. And then here's, look, that's great. 64, bulls are trapped. They buy more. 66, 67, 50% here. Maybe they don't get, maybe if you didn't get filled here, you could get filled here. But once I start to see this, I kind of think this trade's over and I missed my exit. But get filled here, exit on 72, and there's an end of the day trade all the way up to bars 77, 78. So how do we frame that trade? Well, we see 60, we see 70. There's a bull bar and there's a tail on 71, so we know bulls are trapped. It sells off. Deep pullback, so that's not good. You almost get stopped out, but then you make your target at 12:50, so 10 minutes before market close. Good day, good day. Let me go over my pickup. Oh, why does that happen? All right, so look real quick. I know I'm doing two things at once. This is what I wanted to see. I wanted to see a tail on my fill bar because I know now that, and that's not, the market could still rally against me. But what I am saying is that I like this because now I know there's sellers there, and I was one of them. Front running bears shorted this bar, they made money. Trap bulls bought up here, they buy more lower, they get out right here. Second leg traders, that's me, that's us. I'm shorting right here because we understand the dynamic. We're gonna get short when there's a bias in the market where trap bulls are getting out. I use bias very lightly. The only way the market can go one way is when trap traders are forced to do something. Bulls are forced to sell, so that's what I'm looking to take. That's what I'm looking to exploit. All right, so this is where I made my mistake. And I was at work, so that's pretty messed up of me to be trading like a dummy at work. I was short here. And then, so I got filled on 44. I didn't see this rally happen. I started looking at my phone around 51. No, excuse me, around 50, 51. And then I was like, man, I don't think the market can make a new high today. So I put my stop like somewhere in Narnia. I put it a little bit above here. I shorted 53 and I shorted 56, I think. And then I just got out for like a very small loss at the EMA, and then I caught the second leg down here. Or no, I didn't catch that second leg. That second leg. I got filled on 67, exit on 71, but I'm really trying not to average into my trades anymore. I just need to take the loss and learn, because there's a very special dynamic happening psychology-wise when we take losses, and I need to work with that because that's where the power is in trading, is learning how to understand that dynamic. I hope this trade hits while I'm talking so you guys can see exactly what this breakdown is about. I'm doing it, and if you guys want to see me do it live, check, there it is. Bam. You guys saw it. It's in the flesh. I'm probably going to blank out I did not realize I had this open. Anyways, there it is. You guys saw it happen. If you want to see it live, tune in tonight. Talk to you guys later. If you liked it, if you learned something, share a show. Don't be a hoe. And I'll talk to you later. Thank you for your time. Bye.